How many times would you have to blow up your account before you would quit trading? Probably once or twice, right? Now what if I told you there is a trader who blew up his account 4 times in the same year and then on his next try turned $45,000 into $600,000? Another trader also got his account to $600,000 with a strategy that for a change doesn't sound like pure gambling, but some still decide to just YOLO, as this last trader lost $650,000 in just 3 weeks. But first, it is my honor to present to a trader who goes by the name of Farm Paul. He turned just $45,000 into $600,000 after busting his account 4 times this year, and he's the definition of this saying, it takes years to become an overnight success, as his incredible journey full of losses began a long time ago, when 10 years ago he made his first post on WallStreetBets talking about how he was executing strangles just before IV crushes. Then he played with some options on Amazon, and from that point on he made a couple of not really worth mentioning posts, but it's fair to say that he was quite active during that time, gaining experience and hopefully knowledge if nothing else. And with that, let's dive deep into his incredible gain. First of all, he's up by an insanely high $523,630, with his account being worth about $540k, which is because he already withdrew $60k. At first glance, he probably deposited his money in April, May, August, September and November, and he lost $90,000 over the first 4 runs as he kept going bust selling put spreads and iron condors on GameStop until this past month. But what is the actual story behind his losses and later his account going literally straight up? Well, many years ago he tried to convince his brother that volatility was bad. Modeled expected value of repeated coin flips was plus or minus 50%, but the expected value would always explode, 80% plus, and you'd go bankrupt. But the few times you hit, you'd pay back your losses and more. And here's his live proof of concept. His core position of selling put spreads and iron condors on GameStop at rock bottom prices just kept drilling down. Just to explain it a bit, selling put spreads is an option strategy where you make money if the stock goes up and lose money if the stock goes down, while your max profit and loss are limited. Meanwhile, iron condor is an option strategy where you make money if the stock moves sideways and isn't volatile, and once again your profit and loss are limited. Anyway, at around $11 to $13 he dumped in 20k and then another 25k before last earnings. Somehow the stock jumped up by 36% and he doubled his stack a few times. Now spreads are his favorite play because they allow him to leverage up with defined gains and losses while reducing the need to watch the stocks every day. He tries to let the options expire worthless or at max profit, or close just before expiry, because to him the worst feeling is selling at a loss and seeing it shot back up if he hadn't touched it. So yeah, they were supposed to collect all the low income benefits that year, but it looks like they'll be paying taxes instead. He's been playing with smaller accounts for almost 10 years and has actually been net positive for a while, but then he decided to start YOLOing on a strategy that could essentially be summed up as, if you keep buying lottery tickets, or in this case calls, you're bound to hit it big at some point. Now at the same time he's saying you should have a good proven strategy based on solid fundamentals and not to worry about the volatility. In his case it was that good stocks only and eventually go back up. And yes, he's found high risk plays with high return to be more sustainable in the long run, as he used to sell premium with low returns which worked most of the time, but the few times it didn't he would wipe out his portfolio. Better to let the hits far outweigh the losses. And by now you should realize 2 things. Firstly, he's definitely regarded, and secondly, he won't quit, which is why he can't help but to shovel everything he made back in, even though he's scared the only outcome is coming back down to 0. But fear not, because we have another trader who had an awesome year and did that with an actual strategy that doesn't sound like pure gambling. He goes by the name of GameStop, which is why it shouldn't come as a surprise that he has a nickname Deep Fucking Values Cousin. He closed out the last year with a 262% or a $400,000 gain, with his account being worth just a bit over $600,000. So how did he do it? Well, he actually started with under 40k in 2021 and traded his ass off. He's been patient as he traded only high quality setups to limit losses and compounding 5 to 10% 30% gains at a time. He even has an 80 to 90% win rate on trades this year, while the bull market has absolutely helped with that. So he usually puts more than 60% of his account on each trade and makes concentrated high conviction bets. He usually sticks to TMT stocks aside from some border crisis stocks this past week. As I said, he aims to gain 5 to 10% per trade, maybe 15 to 20% if lucky, and then rotate into the next play that's less overbought to limit giving back any gains. His positions become exponentially bigger as his account grows, no stop loss or options, and he finds trades on Twitter, financial news, and through some investing group chats he's in. He does research until he has a big idea and then digs into what stocks to play into this theme and try to find one that's undervalued or at least add it to a watch list and then rotate into it on a pullback. As he looks at company financials, leadership and technicals like RSI, moving averages and volume, and then combines that with macro to make a decision on whether it's a high quality setup or not. Just like he did recently at the end of December when he started selling his Roblox shares for a profit to buy a lot of Geo Group stock. Now this stock has a market cap of just about $1.4 billion and has been rising consistently since its lows in September. So why did he buy now when the stock is already up by 53%? Well, it's a play on border crisis going into election year. Stock trades cheap and he likes the risk to reward versus staying in some of the high flyers that worked in 2023, especially if rates back up a bit, while he would ideally sell out after a 20 to 40% gain after Congress announces new border funding initiatives sometime in Q1. Otherwise, most of his gains came from AMD, SMCI and Unity. Now when his account size was smaller, he would hold for longer and go for higher percentage returns, but now he just prefers to compound smaller gains for risk management, with his goal being $1 to $2 million net of taxes before he would start thinking about cashing out. But sadly, not all traders choose such a wise and profound strategy. Most decide to just gamble, and one such trader goes by the very fitting name of YOLO trader, as he lost $650,000 in just 3 weeks to finish off 2023. But to make it all worse, this wasn't his first gamble that turned into an insane loss, because a bit more than a year ago he lost $90,000 or his full position as he wrecked his portfolio on Netflix and Moderna weekly options. And on top of that, he was even up by about 20k before it turned red, making his pain even greater. Luckily though, he did make some back as he YOLO'd into 0 days till expiry SPX puts with about $6,000 and got rewarded with a $36,000 gain just a few hours later. But that quick huge gain gave him the courage to continue gambling on 0 days till expiry options with bigger and bigger positions, which is why just a month later he lost $115,000 in a single day on SPX 0 days till expiry options, as he just kept doubling down on his SPX calls looking for a bounce to break even, but unfortunately it kept going down every time, 115k down the drain. He wasn't able to digest that loss, his wife didn't know, and that's why he went quiet for exactly 1 year, which finally brought us to his insane loss. As we can see, he bought SPX weekly calls with a strike price at $4,775 and they are down by 99.85% or $648,003. And on top of this insane loss, he's also down by 14k on Neo, 21k on ChargePoint and 5k on an unknown stock. So what happened? Well, he dropped 650k on those calls 3 weeks back expecting a Santa rally, and it worked exactly the way he expected. He was even up by about $500,000 last week and should have closed his position, but he was really hoping to hit $1 million. Anyway, this week has been really choppy and Feta killed most of his premiums. Even that morning he was only 25% down, but the sell-off that started at 10:30 AM killed his position. He was smoking hopium all of that afternoon, expecting it to go above $4,775, and when it finally did, he already lost too much premium to save his position, as he needed it to be above $4,105 to break even. It still hasn't hit him fully. He's at a loss of words and mad at himself for not taking profits along the way. It is what it is, and he's just hoping to have better risk management for 2024. And if you want to see how this trader went all in with margin and made an insane then come back, click on the video just popped up. If you like my content, make sure to subscribe, and if you have any questions or recommendations, leave them in the comments down below, and thanks for watching.